In this video, I'm going to show you how to make consistent profits selling naked puts on your favorite stocks. And not only that, I'm going to show you in detail and explain to you like nobody else has why naked puts are good and powerful, how to implement them, and why they're not as risky as most amateurs or beginner traders think they are. But before we do that, huge announcement. Don't worry about subscribing, liking this video, or looking for the coaching and Discord link. We're going to get to that. I promise. I want to dive right into naked puts and show you guys how you can print consistent profits with this strategy. But first, today, in just a few hours, my free masterclass webinar today, December 6th, 8 p.m. Eastern Time, 5 p.m. Pacific Time. Very limited spots available. Every student that's ever attended my webinars have said they've learned more in the 1 hour they've spent with me than they have anywhere else. Don't miss out, guys. The link is in the information box below. I have a huge announcement at the webinar, and I'll be answering all your questions with a Q&A. I look forward to seeing you at the webinar later this evening. Many beginner traders believe that naked puts are extremely risky with no real upside and that they should not be implementing them into their portfolio. But this couldn't be further from the truth. And in fact, a lot of the videos on YouTube talking about naked puts don't really address naked puts. In fact, a lot of the videos talking about naked puts don't actually address the true concerns or issues or how to manage naked puts. They just fearmonger and create unnecessary panic and fear or pandemonium around the idea or the thought of even running a naked put. But this is because most people, even people on YouTube making videos, don't actually understand naked puts and how powerful they are. And I'm going to explain to you guys in this video how to implement naked puts into your portfolio, if you should run them, and where and when you should, or where and when you should sell cash secured puts. I'm going to start off by explaining the difference between the two. In both scenarios, you're selling a put. You are writing a put. You are basically obligated to buy the shares of the underlying asset or stock when and if the stock was to fall below the strike price of the put that you sold. So in example one, you sell a cash secured put on Palantir at $70. You take $7,000 of collateral, your brokerage does, and then you collect the juicy premium of $50, $60 to sell that put. If the stock goes up, the put expires worthless, the collateral is released, and the profits are yours to keep. However, if the stock falls below $70, the strike price of your put that you sold, at expiration, you will be assigned. Your broker will take the $7,000 collateral and purchase those shares for you. Now, when we are selling a naked put, it's really not a whole lot different than selling a cash secured put. The real difference is you don't need $7,000 collateral to sell a naked put. You only need about 20%. So in this instance, it would be about $1,500, $1,700 to sell a put on Palantir at $70 strike. So if you're wondering, Corey, what happens if the stock price rises to $80? Well, the same thing happens as a cash secured put. The put expires worthless and the premium is yours to keep and your collateral is released. Well, if the stock doesn't do that and it falls below $70, the exact same thing happens as the cash secured put. You get assigned, $7,000 is taken out of your brokerage to buy the shares. The difference is with a cash secured put, you are covering the position with $7,000. With a naked put, you're securing it with around 20%, which is about $1,700. This is when you enter to sell this put. So let's say when you sold this $70 put, the stock was at $73. If Palantir was to drop to 72, they would actually take more money from your brokerage buying power and apply it to the collateral. It goes off of delta and gamma. As the stock gets closer to being in the money, more money is moved over to collateral. And as the stock moves further away from the put, more collateral is released into your brokerage. I'm going to show you guys a real example of this in my brokerage account that I did this week, specifically for this video. Naked puts are very powerful, but there's really only one caveat that's very important to understand. If you have a $100,000 portfolio and you sell $100,000 worth of naked puts, you're really leveraged into a position of where it's $300,000. If all of those stocks start coming down and get close to your strike price of the puts, even though you had 100 grand to cover those positions, that was at 20%. So as the stock starts to drop, they're going to try to take more collateral and you won't have it. And therefore they're going to start closing positions on you. You're going to basically have a margin call, a house call or a Fed call based on the amount of money. So you don't want to have a margin or a house call against you for not having enough capital. So as a quick and easy example, let's say you have a $100,000 account and you want to sell naked puts on Palantir at a strike price of $70. This will require about $1,700 collateral per naked put. Let's say you sell 30 of those, it's going to be roughly $50,000 to $55,000. But you're okay. You have a $100,000 account. Your brokerage has $100,000 in it. So this is fine. You will be okay right now. However, if the stock was to go down from $73 where you entered this sold put or this short put, if it goes down to 72, the collateral is going to increase. You're going to find real quick that your $55,000 collateral is now $65,000 or $70,000. If the stock drops again to 71, this is going to turn into $80,000 or $85,000. Then you're going to start looking at a possible margin call because you don't have enough to cover 3,000 shares, which is 30 contracts. 3,000 shares is a lot. This is $210,000. And with $50,000 cash in your account, which on margin is $100,000 margin value, you are under leveraged. So this is $210,000. And on a $100,000 margin account, which is really only $50,000 cash, but it's $100,000 in margin, you are over leveraged by like 100%. So this is not good. So what I say is typically you want to sell puts that are slightly safer when they're naked or only on stocks that are going up and you're selling them as the stock is going up so they're decaying rapidly. Or you got to make sure you have enough capital in your brokerage account in case something happens. So on $50,000 cash or $100,000 total brokerage value on margin, you'd really want to find yourself in a position of only selling about $30,000 worth of naked puts, because then even if it goes up, like I just previously explained, you're only going to be over leveraged 20 or 30%. They'll close a few positions. It's not a huge risk. You want to try to give yourself room. So at a cash secured put on $100,000 in your brokerage or on margin, you could sell 14 cash secured puts on $100,000. So realistically and safely, if you're doing it right, you could do maybe 20 naked puts. But I really think that's a little on the aggressive side. You want to treat them sort of like cash secured puts, but they just require less capital. So if you are selling some naked puts, you can just go ahead and sell some other puts that you normally wouldn't be able to sell. So I really wouldn't sell naked puts to 100% capacity, because really that's going to 4x you and over leverage you by 4x. You really want to think about what a cash secured position would be like. So a $20,000 account or $25,000 account, you might want to sell 3 or 4 naked puts, which means it would be 1/4 of the collateral. As long as everything worked out, you'd be good. That's going to leave you with some extra cash to sell a few naked puts somewhere else on a cheaper stock. So instead of just selling 3 cash secured puts on Palantir, you could do 4 or 5 naked puts and go over to SoFi and sell 2 naked puts there. This way you're not over leveraging yourself too dramatically, which is not good. Let me show you some examples on Fidelity. One of the stocks I sold naked puts on this week was Microsoft. And I did this because of confluence. Let me show you. When I saw the 10-day, which is the yellow line, go above the 20-day, and they're both above the 100-day, I noticed that we had a break of structure right here. And I explained break of structure and all these technical analysis terms you're about to hear in my coaching and in my Discord. And you'll see there's another break of structure here and then another one here. When I saw this big bullish green candle break these structures, I immediately sold a 420. And as it went up here and resisted and started to come back and I saw all this resistance here, I sold a 422.50. Then I watched as Microsoft ran up and resisted yet again right here, leveling off on volume. And I sold a 437.50 naked put. And this is a decent amount of money because it's $58 for these two. And I think it was $58 for the one up here. So this is like really close. So this is like basically $174 and the collateral is low. Let me show you. So right here, you can see that I sold 3 puts on Microsoft, naked puts, 420, 422.50, 437.50. And you'll see the collateral on this top 420 is 88. The one above it is 9,000 and the 437 is 10,000. The closer the put is to the stock price, the more collateral. But even amongst these 3 puts, this is only 27,000 in collateral versus a cash secured put, which would require $42,000 collateral. So I can make 3 or 4 times the money with naked puts. But naked puts are generally for traders or investors that don't really want the underlying stock as much. They're treating it more as a trade to just collect the juicy premium, which is perfect on this type of situation when a stock is making a bull run. I've been selling naked puts on Palantir and Microsoft as of lately. You can see right here. Another naked put here on Palantir that I sold and made like $75 on. Very good premium. I've been able to make consistent money in my big account doing the same thing. I've made several $100s a week on each stock just selling some out of the money naked calls. Very good if you guys want to print ridiculous premium for a low collateral, but you just have to make sure that you have enough in your margin account. I have been able to consistently generate a 3 to 5% return per week. 3 to 4 on average, which gives me about 12 to 15% per month. Last month, I was able to generate just under 15K selling naked puts. But then I did have like pretty close to $90,000 in naked puts, which is the equivalent of about $180,000 to $250,000 in cash secured puts. But naked puts are really good because you can sell them, and as the stock runs up and away from the put, you can buy it back for a pretty decent and substantial profit and then sell another put closer to the money. It's really good on bullish stocks or consolidating stocks, but you really have to incorporate it into your portfolio in such a fashion where you're not running it on bearish stocks, although the downside risk is not really any different from a cash secured put. If Microsoft was to fall below 437.50, which is this put right here, then this collateral would just keep going up and up until it got to 42,000, which would roughly be when the stock falls below 437.50. I would just get assigned and I would just have 100 shares, same as a cash secured put. So it's very powerful because it gives you the same assignment risk as cash secured, but less collateral up front. So on those bullish stocks, you can sell more of them and make more premium. It's a very good way to make juicy premium while still acquiring stock at a discount, as long as you understand margin and margin calls and make sure you don't over leverage yourself. Because remember, just because you have a $100,000 account doesn't mean you can sell $100,000 worth of naked calls. I would say no more than 10% per stock, and I definitely wouldn't run any more than 30-40% naked puts. This way it gives you that 60% wiggle room. If the stock's going against you and you feel it's going to be bad, you can buy to close at a small loss and move on to something else and sell more naked puts. Once you get used to this and understand it, you will be able to implement this into your portfolio more efficiently. And I do teach this in my coaching and in my Discord, as this is a very powerful strategy. So if you're confused by margin calls and margin in your account, naked puts, and you don't quite understand this and it's just too much for you to grasp right now, or maybe you're new to trading, or maybe you want to retire early, I would love to help you, fam. I grew up in a Catholic household. My parents were hard on me, specifically my mom, to help others do the right thing. And I really have tried to do that my whole life. And when I achieved financial freedom, I set out to help others. My dad has led by a great example, helping homeless veterans get off the street for the better part of the last 10 years. And so I set out on a goal and a mission to help others just like myself and you to achieve financial freedom and to achieve your goals. And I would love to help you. You guys can sign up at any time at investorcorey.com. The link is in the information box below. I offer a full coaching, Discord, and training course. This way you guys can surround yourself with like-minded traders that are just like you. You guys can see on the screen all the profits my students have been making, but don't take my word for it. Let's take a listen to what my students Josh and Adam had to say. What stood out to you the most when you originally signed up for the Discord and the coaching, really gave you the incentive to want to join? And do you still feel the same way now? And what would your message be to others that are, in the same situation?
You were more focused on like the actual strategy of things as opposed to, pushing a particular stock or trying to almost trick people into how they can get rich. I'm also a masterclass student as well. And that's where I really took things to the next level. For anyone who's thinking about joining, is anyone can do this. It's just really putting in the work and the effort to meet Corey halfway, but he will definitely get you there. I started with about $300,000 portfolio. Initially saw about between 60 and 70,000 within my first 6 weeks, which I was very excited about. So now I'm really, really excited to share that I've grown that $300,000 portfolio to well over 500,000. I'm definitely reaping the rewards now. Don't wait. I honestly can't thank Corey enough.
What would you tell someone who's skeptical about me and learning options, or just from learning from someone online who is on the fence and needs motivation to get started? Like they're watching the YouTube videos, but they don't know, can I trust this guy? Can I trust the options? Or even if they trust me, can they trust what I'm teaching? Will they be able to learn? learn? What would you tell them to motivate that?
So I started with 15,000, right? I am now at $40,000. Okay. And I'm so proud. It feels, amazing to be able to share this, because I know that there's so many people that will do the same, right? You have to just trust Corey and trust what he's teaching and what he's offering, because he means so well.
So you heard what my students Josh and Adam had to say. If you want this to be your success story, I would love to help you, fam. Just go to Invest with Corey right here. You can check out the case studies to see testimonials from my students. You click on training and you'll watch this video. It will answer every question you may have, because unfortunately I don't have enough time in this video. Then you'll be able to book a call with my team and I so that we can help you achieve your financial dreams and goals. I look forward to helping you when you're ready to join. Now, there are two ways to look at this. The first way is you want to sell Palantir puts at $70. With cash secured put, CSP, this is going to cost you $7,000. So if you have a $100,000 account, we're going to divide this and show you what I'm talking about. $100,000 divided by 7,000. Oh, there we go. You could sell 14 cash secured puts. So 14, and then this would be how much premium will we collect? Let's go over here. We're going to look at Palantir going out to December 13th next week. And a $70 put is going to give us 100 and let's go in the maybe middle, 165. So 165 is the price we're going to go with. 165 times 14 equals $2,310. Okay, make $2,310. Now, with naked puts, you only need about $1,700 or $1,800. We'll go with $1,800 just to be safe. $100,000 divided by $1,800. You could sell 55 cash secured puts. So you could sell 55 naked puts. So naked put, this is going to be about $1,800. You could sell about 55 of them. So 165 times 55 equals $9,075. So this is a far cry from 2,300 to 9,000. This is over 4x return compared to cash secured puts. However, in this situation, if there was a margin call issue and the stock price started coming down even to just $70, you'd be looking well over 50% margin requirement. So what would happen is you would basically double. So you'd be 100,000 in the hole. You need 200,000 instead of 100,000. So you don't want to be in that situation. You can honestly make a lot more money just by doing it about halfway. So sell 30. You would sell 30 naked puts. What this would do is 30 times 165. You would generate $4,950, and that would only be about $50,000, giving you 50% or $50,000 more dollars to cover any issues if the stock starts coming down. Buy some back at a loss. It's a lot safer. I still would play it even safer than that. I might only sell 20, and that's what I'm going to explain to you guys next. So the advantage of this in selling naked puts is we could sell naked puts for $1,800 roughly, and we could sell 20 of them. So what happens here is we sell 20 times 165. This is the safe way to do it, or safer. And we make $3,300. So we make $1,000 more. And the collateral is going to be a lot less, because instead of 100,000 in collateral, we're going to make 1,000 more, but our collateral is only going to be about 36,000. So a third of the collateral and 30% more profit. This isn't, my honest opinion, is a lot safer. It's got safe written all over it compared to over leveraging. So at 36,000, we still have $64,000 worth of money to play with to make sure we're safe on these naked puts. Instead of chewing up $100,000 to make $2,000, we're chewing up 36,000 to make $3,000 or 3,300, 1,000 more. 30% more. The real advantage comes from the individual that sells the naked puts. Let's say SoFi pulls back to like $14, and let's say both of these individuals want SoFi. Well, the individual that sold the cash secured puts, all his 100,000 is tied up whether it be all in Palantir or in multiple stocks, it chewed up all of his capital for cash secured puts. He can't take advantage of SoFi pulling back to $14 or $14.50. He'll miss it. With the naked puts, there's only $36,000 in collateral. So we have $64,000 to play with. So we could put $6,000 into SoFi, still leaving us with $58,000. So now let's say we buy 500 shares of SoFi. 500 times 1450, $14.50, $72.50. But then SoFi runs up $1.50, let's say. We make $1,500 and it goes from $14.50 to $16. So what we're going to do is $72.50, 16 times 500, take away 72. So we make $750 here extra because we're able to go into SoFi. We could go into SoFi or any stock for that matter for $72.50 because $72.50 plus $36,000. Let's add this up so you guys can see it. 7250 plus 36,000, 43. So 43,250. That is literally half, less than half of what the cash secured puts were. So by running this safely at $30,000 or $36,000 for naked puts, leaves us room for other opportunities that might pop up in the market. If we sold these naked puts going out 2 weeks, this SoFi trade we could have got into, in the span of that week or two, we could have taken $750 profit and we'd be back at $36,000 utilized, and we'd have our $64,000 of free cash ready to go to back us up in case of any issues on these naked puts. So by running a naked put strategy, it's not just you can sell more naked puts, it's that you can sell a little bit more and make a little bit more money on way less capital up front. And if other opportunities in the market arise like SoFi, or maybe not even SoFi, maybe SoundHound pulls back to $11. So you buy it, and in the 2-3 weeks that you have this naked put, SoundHound runs to 14 and you just made another $1,200-$1,300. You can tack that on to the 3,300. So you could do SoFi and SoundHound. Let's say you only made $1,000 each. Now that's $5,300 as an example. And this still only equates to about $50,000. So it's literally half the collateral and almost double the money, and you're still being somewhat safe, or pretty damn safe, on the naked puts. That's what makes this so powerful. This isn't a situation of you can sell triple, quadruple the naked puts. Sure, if a stock's exploding, you can do that and work your way up and roll up in strike price. But realistically, conservatively, and consistently, as well as safely, you can sell 6 more naked puts, make a little bit more money, and have room to do other things that you normally wouldn't be able to do on cash secured puts. And you can also buy to close them just like you would a credit spread or a long position where you buy a put or buy a call. You can also buy to close them for a loss if need to. And they're just very powerful. It just gives you more room in your brokerage to make other moves, allowing you to enter other stocks. We've all been there, right? You got your money tied up in cash secured puts. A stock comes along that has a pullback. You want to enter. You've been waiting for it for a long time. You can't do it because all of your capital is tied up in cash secured puts. But if you have naked puts and you leave yourself enough room like I showed you here, only utilizing 1/3 of your capital, when other opportunities come up, you can enter into those opportunities. Maybe you want to sell covered calls on stocks you own. Maybe you want to buy stock just to sell covered calls on it. Maybe you want to sell a naked call, which if you want to see a video on that, I will make one to match this naked put video. But selling naked calls is also very powerful, just like selling naked puts it. And in this situation, it gives you room. It gives you room. And selling naked calls is the same way. Instead of spending $50,000 on SPY or $60,000 to sell a covered call, you can sell a naked call for about $12,000 to $14,000. So therefore, if you have a $100,000 account, you can sell 1 or 2 naked calls and manage accordingly. And if other opportunities pop up, you can get in and out of other stocks to make additional money. Just understand your risks with margin and not over leveraging yourself. It's all about diversifying your portfolio. 30% in naked puts, 20% in some stocks, and leave the other 50% to cover any issues. This way you're utilizing half the money up front and you're making anywhere from 30 to 50% or maybe even more than that over what you would with the cash secured put. And on these naked puts, if the stock drops, you're going to get assigned and buy the shares like you would in a cash secured put. However, you can't get assigned 20 times on naked puts. So if the stock on $100,000, that is, so if the stock was to fall to 72, 71, and getting close to 70, you'd have to buy a few of them back at a loss. And that would be a sticky situation, which is why I only recommend selling this many on a $100,000 account if you're really bullish and the stock is going up already and at a support level. You don't ever want to exceed this threshold if you're uncertain and you don't know what you're doing. So if that's the case, you would sell the same amount as cash secured. You'd sell 14 naked puts, allowing you room to enter the stocks the same way you are here. You're treating naked puts, as you could really look, my way of putting it is you look at naked puts as margin secured puts instead of cash secured puts. The issue with naked puts is that you can't get assigned on them. If you are over leveraged, you'll have to close them for a loss. So just understand that. Naked puts, very powerful. The stock is consolidating at a support, very strong support, and you believe in the stock at that support. You have all your confluence on the stock and everything's pointing to it going up. You can get into naked puts. And as it starts to go up, you can add a few more naked puts and it makes it less risky if the stock is bullish and moving up. In a bearish scenario where you want the stock but want it as a discount, cash secured puts are better. Or if you want the stock, instead of selling 14 cash secured puts, sell 10 or 14 naked puts. It's the exact same. It's the exact same thing, less cash up front, and you can actually afford to get assigned because you'll be selling the same amount of puts. It'll just be less capital up front. You'll make the same $2,300, but you will only be required to put up around $22,000 collateral, which is a lot less. Let's just double check on that number. 1,800 times 14, 25,000. So if you were to sell 14 naked puts, it would be 25,200, which is really good. It's 1/4, which means you have just enough to get assigned on all of them like you would on a cash secured put. You get a discount on the stock. And this is just an example of you're utilizing your whole account. I wouldn't recommend selling all 100,000 on one stock. You could divide this up to 10 stocks, 10% in each stock, but you don't want to be all puts in all positions. So realistically, 10 stocks, but you'd only want like maybe 4 or 5 of them in puts, meaning you'd only want to have 20% of your total portfolio in a naked put. So on 100,000, this is like well into the max. So I would say 14 naked puts at this exact price would be about 25,000 on a $100,000 portfolio is plenty, leaving you $75,000 for error, as well as getting into other positions. There is a way to truly utilize naked puts, and I've shown you the powerful strategy that you can sell the same puts as cash secured puts. And in the interim of the expiration of these puts, you can make the same money, but you leave yourself open for all these other opportunities and to sell a few other naked calls or puts elsewhere, as long as you understand how to manage the position. If you're having trouble comprehending naked puts, even though I've explained in this video, if you're still needing help, I would love to help you. You guys can sign up for my Discord training course and coaching, which covers all of this in full detail. The link is in the information box below, and I look forward to seeing you when you're ready to grow your financial wealth and take control of your financial journey. Don't forget, guys, my free webinars today, December 6th, just a little bit later on this afternoon, 8 p.m. Eastern Time, 5 p.m. Pacific. Do not forget, huge announcement during this webinar, very limited spots. I'm going to show you guys more in this 1 hour, and you're going to learn more in this 1 hour than you will anywhere else. That's what all of my previous webinar attendees have said, and my students as well. I look forward to seeing you guys there. But until the next video, take care of yourselves. One love, fam.